Yeah, just hope you can see my screen now. Can you see my screen? Hope my screen is visible. Just give me feedback. You people see my screen? Yeah. So we are going to start from where we stopped last time. And the last time we had tackled about volume imbalances. I gave you scenario that volume imbalances are DC gaps. We had tackled about volume imbalance between the, but if it does happen, price will always act as a key level, either support or resistance, before price can continue in a particular direction. Continue in a particular. I gave you these illustrations last time. Hope you can see this is also volume imbalance. This one, the candle closed here and it opened here. Then price had to come back, tap into that key level and continue down. Yeah, to those who are starting from the middle, just be patient. We shall be recapping. This. Shall be recapping. Yeah, another scenario of volume imbalance is this that you're seeing. Yeah, there are such gaps. They're always between the normal candles always open this way. For example, it closes like this, opens, it doesn't leave any gap. Hope you can see also this scenario. Price closed here, it opens exactly at the same area. But whenever price closes like here, this part, then it skips and opens from here. This gap, you see this gap here? This gap that remains here. That is the what? The volume imbalance. And you can see the scenario here. That is the volume imbalance. So today I'm not going to repeat the previous one. So today I'm going to tackle this new PD arrays. I told you PD arrays, they are key levels. It is in full, it is premium and discount arrangements. Get? So those are what we call PD arrays. So they are premium and discount arrangement. And I told you that price is always moving from discount to premium, and from premium to discount, and from discount to premium, and from premium to discount, from discount. And if it is reversing, it goes into deeper discount, then it goes to premium, then to discount, to premium. You get? That's how price is always moving over and over. If it is a if the market is bullish, it will make a low, a high, higher low, higher high, higher low, higher high. Then here lower, lower low, lower low, lower high, lower low, lower high. You get? So that's how price is always moving. Keep that into it. So today we are tackling balance price range, which is supposed to be BPR to represent balance price range. So what is the balance price range? The illustration is here. It refers to an area on a price chart where two opposite fair value gaps overlap. You get? Where two opposite fair value gap. And I taught you what fair value gaps are. I told you fair value gaps are these gaps that remain, this gap that remain. You get? Here there is a gap, and also here there is a gap. So we can key point. When price comes back and returns
I hope I hope Stonas knows that his network are killing him out anyway.
Let's continue. So, so I was still showing you the bearish BPR. Bearish BPR, just as I told you, a BPR, they are overlapping fair value gaps on both sides, this and this. You get? So this is the first one, this second one. So price will always come into that key level before it gets back down. You get? Here, whenever there is a BPR at such a place like this, and then there is another fair value gap here, you ignore this, then you can use this one for price to continue going down. Yeah, this BPR are very high probability. Whenever price will key into them, price will always reverse backward. And if in case they are inverse and a candle closes here, then means price has willingness to continue upwards. So you should put that into consideration. Yeah, let's continue. So illustration of a BPR. Hope you can see this illustration. This one. This is what you will frequently find in the markets. You will find such a chart. So where can we see BPR? Hope you see here. This was a fair value gap. And at the same time, this is a fair value gap. Let me use a rectangle to draw them. This one from here up to there is a fair value gap. Then from here up to there is a fair value gap. Let me from here, hope you see. So there are two fair value gaps at one place. Yeah, they are overlapping. One at this side, this one is a fair value gap, then a fair value gap at this other. So this one becomes a BPR in full easy, a balanced price range. So price will always tap into it and continue. That's why you see this issue here shows price will tap here and will come and take this buy side liquidity. Hope you see this sell side liquidity has been taken. It is now hunting for buy side liquidity. And I taught you how where liquidity is. I told you liquidity is always on low swing points. You get? Yeah, one swing point that taken out, then price always reverse. You see, this was a swing point that was taken out, then also this one has been taken out and price is reversing. So price will continue until it takes out the upper one. So let me show another scenario and we'll go on charts. Hope you see this. This is a BPR. There is a fair value gap here. I told you fair value gap, you mark, they are made up of three candles. This is the first, second, third. So the gap that remains, you get, you see other candles, they don't have gaps. This one already, there's no gap, you get. So this gap, let me use this rectangle from here, from this point up to here, that is a fair value gap. Then there is this one up to here, that is a fair value gap. So you see, this is the first, this is the second. You get? So they are overlapping in one area. So that is what we call BPR. So when price is getting back up, it will tap into that BPR and then will continue downward. So they do happen not so frequently, but whenever they happen, they are high probability scenarios that you can take a trade. Another scenario, hope you see this. This was a fair value gap. From here to there, this is a fair value gap. Then from here to there is a fair value gap. So this one, this is a BPR. Yeah, hope you see that aspect. So this part, when price will tap here, then it will continue upward. So that's how we mark BPR. I'm going to take you onto the charts and you see how BPRs are formed. Just be patient with me. Let me log in my now let me show you a BPR and how we are able to implement them into our trades. Please, if you don't understand them here, you will get back and you watch our previous videos. Even this will be uploaded. Yeah, so hope you're seeing the charts now. Yeah, let me look for you how BPRs look like. Watch here. Watch here very well. We already have here a fair value gap. Just watch very well. This was a fair value gap on the side. This one, I'm going to make it bold so that you can be able to tell. You see that part with this, actually up to there up. Yeah, then this part is also, here I'm going to draw a rectangle, this part. That one is also a fair value gap. From where? From this point, you see, from that low up to here down. So this is an FVG, a fair value gap. And I told you the implication of fair value gaps. So I can also draw, just I'm adding a line to make it visible to your eye. This is a BPR. Hope you see how price reacted. You get? Yes, even this part is a fair value gap, this part here. But I just wanted to use this since they are all in one overlapping what. So you realize that price, when price came back into the BPR, it was rejected, then again came tried out, it was again rejected. You get? Yeah, I told you that price is liquidity or money is always on swing highs. Hope you see this part. Price, even though it was rejected at that point, but at least it took some liquidity up from here before it was pushed up, picked this liquidity. Let me just draw those zones so that you can see. I'm training. I can now remove this line that I used to add. Yeah, let me just use this other side here to draw with another colored rectangle so that you can know they are overlapping. So these are two kinds of fair value gap overlapping. this one with a different color. Let me just use a different color here. Hope you can see now. There are two. There are two. I can even name there. I can name them. Just be patient with me. Yeah, so you see, check. Now liquidity was here at this swing high. I told you liquidity is always on swing points. You see, immediately liquidity was picked from that swing high. Price reversed and began to seek for liquidity here down. You get? So when liquidity was picked from here by this week, price now began to hunt for this liquidity. You see it has picked it. So it is most likely to come and retest this fair value gap. Then if it is going down, it will continue downward. You get? So you should always put that into consideration. So this BPR are powerful. I'm going to take you to another scenario. That one is already done. Scenario of BPR. We are seeking for BPR, just as we have always done with other aspect. Yeah, this one can be a BPR. This one starting. Of course, I told you these large areas where a large area has been left with fair value gap, we call them liquidity voids. So I'm just marking the whole of it because this zone is a liquidity void. This zone is a liquidity void. Yeah, you see, that is the field with a fair value gap. And I hope you see how price, after closing below here, it closed here and then came retested before it went downward. So always pay attention to such areas. Let me take you to another place, another point. These are now liquidity, these are large moves. Let me use 1 hour and see if I can support more scenarios. Yeah, you will get to know how to use this more frequently. I taught you about inversions. Inversions for them are just fair value gap that have been inversed, and this is now an inversion. Hope you see after price closed below, it had to retest before it continues in that direction. So I taught you about that. But however, this session we are concentrating on BPR. They don't always happen frequently, but whenever they happen, they are high probability in scenarios that you are supposed to use to trade. Yeah, always use them as an opportunity. Look here. Hope you can see this scenario. This is this one. This point here is a fair value gap overlapping. So I'm going to draw a rectangle to make it clear. Just watch. I'm going just to make it. Hope you see that is a BPR. Is a BPR. Is a BPR. Why? I'm going to show you. Check here. This was a fair value gap from this side where I picked it from. This one, a fair value gap. Also, this ends, we have those fair value gap. You get? So you see how price came here, consolidated, tapped into the BPR, then immediately went down. It came, tapped into the BPR, reacted a bit small, and it inversed the BPR. So immediately it inverses the BPR, meaning we change the direction. Now price will begin going higher. So always put that into consideration. Hope you see immediately what. So once again it comes and inverses, yeah, I will show you a whole lot way of using these key levels. Any other BPR, let me look for another BPR that we can use. Yeah, here we can use this. We can use this. We can use this. This area can be a good, though this is a very big area. I think I can get it cleaner at 4 hours using a 4-hour time frame. Let me check 4-hour time frame whether it can permit us to use. Check here. Indeed, I was right. You see this BPR, this fair value gap, that one. We have two fair value gaps in this area. The one this side and the one also here. So that's what makes a BPR. You see, immediate price closes here, has to tap back into that part before price begins to go down. Another BPR, look very well. Check this point. Check this point here. Of course, the good thing, yeah. You see, now this one failed, and I told you whenever it is inversed, it you immediately change the direction. You get? You immediately change the direction. You see now this one was inverse. Immediately price closed above here. It retested it and continued up to that point. And then we still have another BPR here. Just pay attention to this. Check this BPR. This was a fair value gap. Check that BPR. Even though it was very small, you get? This was a fair value gap, the small one, and also this part. Also this part was a fair value gap up to, of course, the other end, is it? Yeah. Check how price reacts in that area, in that zone. So when price taps into that area, it first bounces and then before it can inverse it. Yeah, so I've just given you an idea. Of course, these are not perfect way of entering. I'm just showing you to bring you to the knowledge and realization of BPRs. There are very many in the market. As you see, I'm still drawing. I've not yet exhausted. In every time frame, you will find BPRs, and always price will tap into them and what also here there is a BPR. This is a fair value gap overlapping with the other side of, you get? So price is most likely to what? To go, this ends upwards. So yeah, hope you have understood how to spot out BPRs. You will go on your charts practice, and if you are what, you can always send me screenshots so that I can what. So tomorrow I want us to tackle another topic. The good thing, I've sent you the PDF. You will see, you will go and recheck those PDFs and see and understand